Hey everyone, welcome to another episode of Investing Kev. In today's video, I want to talk about my 5 favorite REITs, short for Real Estate Investment Trust. We'll take a quick overview on what REITs are, take a look at each of the top 5 REITs, their dividend yield, and why it's on my top 5 favorite list. Don't forget I have a link to my portfolio spreadsheet below. You can follow and track and see what stocks I'm invested in, as I'm currently invested in 4 different investing strategies, and we'll see how they do over a long period of time, through the good times and the bad times. Also, check out my stock breakdown videos. I have quite a few electric vehicle breakdowns such as Lucid Motors, ChargePoint, NIO, Xpeng, and Li Auto, but also have SoFi, Teladoc, JD.com, and DraftKings. If you like this video, please like it, subscribe to this channel, and leave a comment below. What are REITs? REITs, or real estate investment trusts, are companies that own or finance income producing real estate across a range of property sectors. There are many different types of REITs. Some focus on apartments, other on office buildings, retail stores, healthcare, industrial warehouses, and amusement parks. REITs allow people to invest in real estate without having to actually manage these properties themselves. You don't deal with maintenance issues, you don't deal with insurance, you leave that to the REITs to handle it themselves. These REITs are very liquid, meaning you can buy and sell them every day when the stock market is opened. REITs by law are required to distribute 90% of its taxable income to shareholders annually in the form of dividends. Some REITs pay monthly, but most of them pay quarterly. I think REITs are a great way to diversify one's portfolio, get passive income, whether to reinvest back into that stock, or it can allow you to use those dividends to invest in other things, or even live off of them, whether paying for groceries or funding your vacation. And if you want to get more information about REITs, check out REIT.com, REIT.com. At 14%, commercial real estate is the third largest asset class in the US investment market, which is behind bonds at 43% and equities at 38%. The first REIT is one that a lot of dividend investors own, which is Realty Income Corporation, ticker O. They are known as the monthly dividend company. What I like about Realty Income is their management. Through the ups and downs, their management has guided them through it while increasing their dividends for the past 25 years, joining the Dividend Aristocrats list. Looking at some of their statistics, they have a 15.3% compound average annual total return since 1994. They have a 4.4% compound annualized dividend growth since 1994 as well. They have 6,700 properties under long-term net lease agreements, spanning 50 states, including Puerto Rico and the United Kingdom. In my opinion, Realty Income has really strong tenants. They have a very strong portfolio of companies that I think will be around for a very long time. You have 7-Eleven, Walgreens, Dollar General, Walmart and Sam's Club, CVS Pharmacy, Home Depot, and Kroger, which are some of their top 20 clients. These are companies that fit a need, whether from groceries to home improvement to affordable options for daily household items or on the go items. Realty Income has a 98.5% occupancy rate, which is awesome to see because they have actual tenants and these tenants are in these buildings for many years, spanning decades. Currently, Realty Income is trading at $70.62 and the dividend rate is $2.83. Realty Income pays a dividend every single month, so if you divide $2.83 by 12 months, you're getting 23.5 cents per share every month at a current yield of 4%. To get the current dividend yield, you divide the current dividend of $2.83 divided by the current share price, which is $70.62. And as you see, we get a 4% yield. You want to take the result and multiply it by 100 to get the percentage, in which we get 4% at this current time. The second REIT is Simon Property Group, ticker SPG. Simon Property is a real estate investment trust engaged in the ownership of premier shopping, dining, entertainment, and mixed-use destinations. Their properties across North America, Europe, and Asia provide community gathering places for millions of people every day and generate billions in annual sales. Simon Property is a well-known company with a lot of accolades to their name. They are the only real estate company in the S&P 100 index of mega cap companies. They've been named Fortune World's Most Admired Real Estate Company in 2018, which is their 8th time. They've been nominated for the best performing global CEOs by Harvard Business Review in 2013 to 2014 and 2016 to 2019. Even with COVID, people want to be outside. They want to go back to indoor dining, going to the malls with their friends, and not being confined to their house. People keep saying that Amazon will kill retail stores, and I just don't see that happening for Simon Property Group. Their management has a strong track record, and I believe they'll continue to do just fine. Simon Property had to cut their dividend from $8.40 in 2020 down to $5.20 due to the pandemic and keep the company afloat. For me personally, this doesn't frighten me because I would rather have these companies take a temporary hit to keep their company afloat. Simon Property Group's fundamentals are still there, and this is a very strong company. Simon is currently trading at $132.86 with a dividend rate of $6. Within a span of a few months, they've increased their dividend from $5.20 up to $6. The current dividend yield is 4.44%. STOR Capital, ticker STOR, is our next stock as it stands for Single Tenant Operational Real Estate. STOR Capital operates on a net lease model where the tenant not only has to pay rent, but also any additional costs such as real estate taxes, building insurance, and maintenance instead of the property owner. STOR Capital primarily focuses on the education sector and restaurants, such as Burger King, Popeyes, Spring Education Group. But you also have recreational shops such as Bass Pro Shops, Camping World, and entertainment like AMC Theaters. STOR Capital is a fairly new company as they were founded in 2011 and went public in 2014. Every year they've increased their dividends. As you can see, in 2014 they were paying 11 cents. In 2018 they were paying $1.28, and now they are currently paying $1.42 in 2020. Even during the pandemic, they raised their dividend, which is a strong sign of a strong company. Right now, STOR is trading at $36 with a dividend of $1.44, which is a 3.98% dividend yield. The next stock is WP Carey, ticker WPC. WP Carey is one of the largest diversified net lease REITs, specializing in the acquisition of operationally critical single-tenant properties in North America and Europe. They currently have over 1,200 net lease properties covering approximately 150 million square feet as of June 30th, 2021. WP Carey has an annualized base rent of $1.2 billion with an occupancy of 98%. WP Carey has geographical diversification with 62% located in the United States, 36% in Europe, and 2% in other. Their top 10 tenants include U-Haul, Extra Space Storage, Marriott International, Advanced Auto Parts, Forterra, and Metro Cash and Carry. Looking at their dividend information, back in 1998, you can see that they were paying $1.65 per share. Every single year, they've increased their dividends, and in 2021, they are paying a $4.20 dividend. Their current share price is $80, and their current yield is 5.23%. And the last stock is Medical Properties Trust, ticker MPW. We're breaking away from the retail REITs and focusing on the healthcare REIT sector. Medical Properties Trust, they pride themselves at being at the very heart of healthcare. They focus on hospitals such as general acute care, inpatient rehabilitation, and behavioral health. They're currently the second largest in the world for non-government owners of hospitals, with a total pro forma gross assets of $21.4 billion. Medical Properties Trust, they primarily are in the United States with 237 properties, but they're also in Europe with 191, Australia with 11, and in South America with 3 properties. Medical Properties Trust, they have a well-diversified portfolio. They work with operators such as Steward Healthcare in the United States, Circle Health in the United Kingdom, Prospect Medical Holdings in the United States, Swiss Medical Network in Switzerland, and many other countries. I am confident there will always be a need for hospitals because a lot of these countries Medical Properties Trust operates in, they have an aging population and will need to have the facilities to support these medical needs. Taking a look at their dividend history, back in 2004, they were paying a 21-cent dividend per share. When you fast forward that, in 2020, they paid a $1.08 dividend, and currently in 2021, they will be paying a $1.12 dividend. Medical Properties Trust is trading at around $20 with a dividend yield of 5.5%. There you have it, everyone. These are my 5 favorite REITs at this time. We have Realty Income, ticker O, Simon Property Group, ticker SPG, STOR Capital, ticker STOR, WP Carey, ticker WPC, and Medical Properties Trust, ticker MPW. I believe all these REITs have strong management, and they have strong tenants that are reliable and they diversify to fill many needs. Outside of Simon Property Group, these companies have raised their dividends every year for decades, and Simon Property is quickly increasing their dividend as they're recovering from 2020. Let me know in the comments what you think and if you have any favorite REITs. If you like this video, please give a thumbs up, please subscribe, and as always, stay safe, and I will see you all next time.